What's up, everyone, and welcome to the School of Personal Finance. So we are officially halfway through 2020, and what a disaster it has been so far. I feel like I'm living in the twilight zone. I don't know from one day to the next when I wake up if I'm going to be depressed, motivated, happy, sad, grateful. Take it day by day, and I feel bad for everybody out there. I feel bad for all you parents out there. I know that my 3 kids, I feel terrible for them not being able to finish school this year and no summer camps. It's just a trying time. And I feel bad for those parents out there who are trying to work from home, as me and my wife are as well. It's nearly impossible.
Daddy, I want to go to the pool. Daddy, I want to play basketball with you. Daddy, let's go for a walk. Daddy, let's go for a bike ride. Daddy, let's play in the hose. Will you stop working?
It's crazy. Anyway, in today's video, I'm going to talk about the CARES Act, which was passed in the end of March. So now the CARES Act was passed as a relief package for all of us out here that are struggling during these times. And there's some specific things that I want to go over. There's some time-sensitive things as well. But there are some big changes to retirement plans and withdrawals and loan provisions that apply to only 2020. So it's different from last year, and it's different than what next year is going to look like. So these things, they could apply to your life, and there's a small window of time for you to take advantage of them. So I want to make sure that everybody understands exactly what those provisions are. And also, I'm going to give my opinions, my thoughts on them, and some strategies that this has kind of created for everybody out there. All right, let's get to it. If you're new to the channel, I talk all about personal finance and trying to break things down nice and easy so that you can understand and help you become great with money. If you like that kind of content, please make sure to hit that subscribe button and the little notification bell so you get notified every time I upload a new video. All right, so the first thing that I wanted to touch on briefly is just with the CARES Act, they extended the tax filing deadline. So this one is time sensitive. So they extended it to July 15th, which is 12 days from now as I upload this video on July 3rd. So that means that you have 12 days to get in your IRA contributions and your HSA contributions for 2019. So if you have not done that already, make sure to get that done so you don't miss out on contributing for 2019. Another quick point I wanted to make before I get to the withdrawal and loan changes is that they also are not requiring required minimum distributions for 2020 as a result of the CARES Act. So now most of my audience is between the ages of like 30 and 50, so this would not apply to you. But if you have parents that are over the age of 72, then this would apply to them. So make sure to tell them that they don't have to take money out of their retirement accounts this year and pay the taxes on them. This could save them a few $1,000s in taxes. All right, so now let's get into the changes for distributions or withdrawals from your retirement accounts, and also the changes made to loans out of your retirement accounts. You know, this is a good time to throw in for either the distribution or the loan changes that we're about to talk about. You have to qualify. So what does it mean to qualify? If we look real quick at the IRS website, we could see exactly what a qualified individual is. And I'll put a link to this in the description below. So it's anybody who's diagnosed who has COVID-19. It's also if your spouse or your dependent has coronavirus, then you are a qualified individual. But on top of that, there's a whole list of things that qualify you. And it's a very broad definition, you know, to the point where basically most people are going to qualify. All right, so let's talk about the withdrawals first, or the distributions. So with the CARES Act, you are allowed to take what's called a CRD, a coronavirus-related distribution from your 401k, your 403b, your 457, or your IRAs, and not have to pay the 10% penalty that usually applies if you're younger than 59 and a half. So now this is a big change. So that means if you take $100,000 out of your 401k, you will still owe ordinary income tax on it, but you will not owe the 10% penalty. And now the way that it works with the tax, they are allowing you to choose an option. So it defaults to where the taxes will be owed evenly over a 3-year period. So for example, if you take $100,000 out, a third would be taxable in 2020, 2021, and 2022. Or if it makes sense for your situation, you could instead opt to have it all be taxable in 2020. You could choose one or the other. There's no mixing and matching. And now another major point with these distributions is that you could actually put the money back within a 3-year period and then not have to pay any taxes on the distribution. So you don't have to do it all in one felt swoop at the end of the 3-year window. You could put back on a monthly basis. If you want to roll over $1,000 a month back into your retirement plan, you could continue to do that at your discretion. You could start and stop however you want to. So if you find yourself in a better situation and you want to start throwing a few $1,000s back into your 401k or back into your IRA to put the money back in within that 3-year window, you could kind of do that, as you see fit. Even if you can't repay the whole thing, say in that example, you are able to put half of it back, then you could still go and amend the 2020 tax return and get half of the taxes back that you paid, or reduce the amount of the distribution for that year by the amount that you were able to put back. So pretty interesting options there. Another important note with the distributions, and check with your employer again, but they've waived the mandatory withholding. So typically, if you take a distribution from a 401k or a 403b or a 457, you are required to withhold 20% that goes directly to the IRS to prepay the taxes on that distribution. But for these coronavirus-related distributions, they have waived that mandatory 20%. So if you take out $100,000, you're getting a check for the full boat, for the full $100,000. And just to throw my disclosure out there, obviously I'm not giving you specific advice. You need to talk to your financial advisor. You need to talk to your CPA. I do not know you. I don't know anything about you. I cannot possibly give you any kind of personal advice. So this is for educational purposes only. All right, so let's talk about the loan changes now. Now, first, make sure to call your employer. Not all employers are on board with this or have made changes for this. So you have to call and see what is available to you. Now, typically when you take a loan from a 401k or a 403b plan, you could take up to $50,000 or up to 50% of your account value, whichever one is less. With the changes, what they now allow is you could take up to $100,000 in the loan, and you could take 100% of your account value. So that is a big change. And now typically you have a 5-year repayment period when you take out a loan. What they're doing now is they are deferring. You get the first year where you don't have to make a payment, and then the 5-year period starts. So you have a longer payback period on the loan with the first year, no payments needing to be made. So again, talk to your employer, find out exactly what's available to you, but these are big changes with the loan provisions. If you do take out a loan, you have to do it with the intention of actually paying it back. So your paycheck might be reduced, or if it's like a 403b, you have to send in a payment every quarter. If you don't pay back the loan and you default on it, let's say in 2021, then you're in a bad situation. Now all of a sudden, that whole thing, the whole loan becomes a taxable distribution, and you owe a 10% penalty on it. So you could find yourself in a really bad spot if that were to happen. So if you're going to take out the loan, make sure that you're able to pay it back over the time period that you have. If you spend the whole thing in 2020, it might be a struggle paying it back over the next 5 years. And now a key thing with the loan is the end date to take out a loan under this provision is September 22nd. So if the loan is what is right for you, then make sure you get it done by September 22nd of 2020. So one strategy that has presented itself through all of this is that if you have a very high cost 401k or 403b plan, you can take a coronavirus related distribution up to $100,000 out of those accounts, and then you could put it back. You could roll it over into an IRA account, and you would not owe any taxes on that because you put all the money back. And what you've in turn done is you've gotten money out of an account that's very hard to access in normal times, that's invested in very high cost options, and you put it in an IRA where you could choose very low cost investment options. And then in the future, if you have an emergency, if something comes up, if things don't go your way, you have easier access to that money. Yes, you might have to pay a 10% penalty if you take a distribution in 2021 and beyond, but in the 403b, you don't really even have that option unless you have a qualifying hardship. So it might make sense to look at doing something like that. This really provides a perfect opportunity for that. All right, so now let me give you my opinion. First of all, if you've been laid off, if you're really in a bind right now, I mean, this is great. You have an opportunity to take money out of your retirement account. You save the 10% penalty. Yes, you're going to owe taxes, but this might be a year where your income is very low anyway, so you might be in a low tax bracket. This is providing you with an opportunity to get your hands on some money, on some security, so you could sleep at night and you could pay your bills. Then, you got to go for it. It drives me nuts when I hear financial advisors or, radio show hosts talk about how you should never take a distribution from your 401k or you should never take a loan from your 401k. Shit happens. And if you're in a bind right now, this is a good opportunity for you to get your hands on some money. Yes, you're robbing yourself. Your future self is going to be mad at you and all of that stuff. But you know what? Sometimes things are out of your control and you got to get by and you have to survive. And then with that said, if things do turn around for you, you have the opportunity to put the money back also. So that is another good thing. So don't feel guilty. Don't feel bad if you have to take money out of your 401k right now in order to pay your bills. You are not alone. There are many people that find themselves in this situation. That is the reason that they passed the CARES Act. All right, everybody, that is it for this one. I hope that you found that helpful. Please make sure to subscribe to this channel if you've not done so already. Hit the little notification bell. Please make sure to like this video. It helps so much spreading the word and having YouTube show my video to more and more people. Check out schoolofpersonalfinance.com. You can follow me on Instagram as well. I appreciate you being here. I will see you again next week. Thanks.